Right, good. Well, hold on. Oh, shucks. I should be good, Amelia. I should be good. All right. Good afternoon, everyone, and thank you for being here. My name is Joe, Managing Director of Commodities and Equities here at Simpler Trading. We have Amelia in the background running in circles, but I think we're good to go, right? We're doing a short video this afternoon titled Intro to Tape Reading. Okay, so I'm going to spend a little bit of time briefly discussing what it is one can do in order to form a quick bias on market sentiment for the day. Okay, and it's both a complicated and simplistic topic rolled into one. So I'll do my best to break it down in a manner that is not overly simplistic and is in fact repeatable on your part. So first thing you want to do, of course, is establish 3 or 4 news websites that you look at on a consistent basis in order to determine your bias, which is to say, are you bullish or are you bearish? And the way we're going to examine this today is based off of intraday bias, right? And that's because that's what's going to be that's what is going to be most apparent in the articles and the news that you read. So the websites I like to look at for retail traders, or that I recommend, are MarketWatch, Reuters, investing.com, Financial Juice, which is paid, and then Twitter. Okay, and now if you don't have an AP feed, which is Associated Press, like Financial Juice, what you can do is you can make your own on Twitter here. Okay, and there's just a few Twitter handles that I follow, and you can get this from my Twitter handle, JR_StrikeZone. But essentially, I'm watching MarketWatch, Zero Hedge, Chicago Breaking News, which you can probably remove, Forex Live, Daily FX, the Associated Press, Simpler Trading, and then Strike Zone. And so over here, what you can do is on the side of your screen, go ahead and put that little feed over there with Twitter, and anything that's coming out, you'll get those instant headlines right away. And so it's kind of just a free AP feed, so to speak, that you can assemble on your own. Okay, so that's kind of how I use Twitter. Also, you'll see a lot more come out on Twitter quickly that is unsubstantiated news and rumors, which, as you know, buy the rumor, sell the news. And those headlines will hit the tape faster than, say, Financial Juice, or any other AP feed that you have where things need to be verified, fact checked, etc. Of course, fact checked in this day and age is a bit of a oxymoron, but we'll go with it nonetheless. Okay, so let's circle back to what you're going to look at first thing in the morning. And I would look at this from 2 perspectives: 1, the evening, and 2, in the morning. Right. So at the end of the day, when you're kind of reading, what happened earlier in the morning, what moved the market, there's going to be X amount of articles, right? And you can simply go ahead and look at, pick the first one here. What's at stake for stocks, bonds, as Federal Reserve weighs bank chaos? Okay, so there's one article. Let's go over to Reuters. Let's see, business. First Republic shares rise after days of brutal sell-off. Okay, we click on that, and we talk about, let's see, First Republic, the banking, and we go down further into the article. It talks about U.S. Treasury, Janet Yellen. Okay, so you're going to begin to pick up a theme here, right? Stocks and bonds, Federal Reserve, First Republic, Federal Reserve. So the main thing that we're seeing across the board here is what? The Fed, right? So something's happening in the Fed that's going to determine market sentiment over the course of the next couple of days. Well, let's go over to the economic calendar. Here we go. What's happening this week? Well, this week we scroll through all of the market events and we see Wednesday at 013 or 1300 is our Fed interest rate decision. All right. So this obviously stands out quite a bit because interest rate decisions aren't something that happen every week. Of course, and these press conferences are spread out. But I suppose this is a good example to use where, we go through all of these other articles, right? And what is the sentiment? Well, the sentiment clearly is that, one moment. Excuse me. The sentiment clearly is that the market will react based off of what the Fed does in a manner more how would I want to phrase this with a larger magnitude than it typically would. Okay, so we're often going to see articles across the board about the Fed, but you kind of just want to go through and see how many articles are there about it, right? What are the headlines? What jumps out at you? And whatever jumps out at you is is the sentiment that's moving the market at that time. So when you're looking at it in the evening, you're going to determine, okay, what moved the market today based off of these articles and these articles alone, right? Now, you're not hanging your hat on that read or on that sentiment. You're simply taking it at face value, right? This is what this group of people from this group of websites says at this particular time, right? Whether or not it's true is irrelevant, right? So what they'll often do is they could write these articles a day prior, and they'll have a bullish article they can publish and a bearish article they can publish, right? So if the market goes up, they'll publish their bullish article and beyond and go on about their day, right? But they have these written in advance, quite literally, right? So you have to be careful about how much stock, no pun intended, you want to put into these various articles. So let's say we are under the impression that the Fed will not raise rates, right? Or they will not raise them at the pace that they have been. Well, we're going to be looking for a move to the upside. And that's what happened recently, right? And it's figuring this out is not a complicated venture, right? It's not a particularly arduous task, right? We can just take a glance and say, okay, the market went from here to here. Why did you do that? Well, we go back and we look at our articles, from last week and what dominated the headlines last week. Silicon Valley Bank, right? The potential failure of that. And then we had Credit Suisse Sunday night, right? And so it's just simply the headlines that are coming out that are driving the market. Okay, so that's simple enough. Now, what do you do with that? That's the next question. Well, you want to say, how long is this news going to dominate the market, right? How significant is this news as it relates to historical precedent? Which is to say, has this happened recently? Yes or no? Is it likely to happen again in the near future? Yes or no? When's the last time, if it did happen recently, what was the effect on the market? Did it make the S&P move 20 points or 200 points, right? And then from there, you say, okay, this is what moved the market today, and therefore, I think it's going to bleed into tomorrow. And if it bleeds into tomorrow, how far and how long is it going to bleed into the following day, right? And so simply by going through those articles, taking a glance at the headlines and determining quite briefly how much influence you think it will have over the course of the next 6 to 12 hours is how you can form an intraday bias, right? You don't necessarily have to be a financial expert or understand the ins and the outs of the macroeconomic picture in order to determine what you think the most acute reaction is going to be based off of the most recent variable to the trend. Okay, so it's a way now from there you can take this several steps further and start parsing those variables out and assigning different deltas or weights to them as it relates to the grander scheme or the larger picture. But as day traders, or when trading intraday trends, we don't necessarily need to do that, right? We don't necessarily need to know where the market's going to go over the course of the next 10 weeks if we're only looking for 10 points of profit, right? So we wait for the market, we wait for a technical setup to emerge, for instance, a rebound trade, a breakout trade, etc. We wait for an entry that allows us to have a fair stop loss with respect to our support and resistance levels, and then take our trade in that direction. And it's that simple, right? We don't need to be financial experts when determining some of these smaller intraday trends, right? And we always want to kind of measure, when is this next news event going to occur, and how far does the market need to go in the meantime to make that event have to make that event have significant influence on what's going to happen in the next 5 minutes, right? So this Fed announcement's coming about 25 hours from now, 1 o'clock tomorrow. It's about 12:15 right now. So call it 24 hours. So it's around the corner, right? So between now and then, generally, we're not going to have big moves off of new and independent economic news. Okay. So knowing that we've got this big announcement around the corner, if something pops up here on Twitter that, normally would be quite the game changer in a soft and quiet market, we know now that, if something comes out about China or, about the war in Ukraine, it's not going to have as immediate of an effect, one, but two, as long lasting of an effect over time. Okay. And so it's essentially all we're doing is weighing kind of headlines on Twitter versus economic events on investing.com. And that's about as simple as it can get, right? First of all, yeah. So in the evenings or in the mornings, glance through these headlines and see, all right, what's dominating the headline. And in theory, that's, what pundits and, whomever has prescribed as the market moving or the market catalyst, right? And that's what we're going to be, and we're going to be looking for headlines over the course of the day that support or contradict the variables that moved the market yesterday, right? And if that variable that moved the market yesterday appears to be very strong, we're going to expect a hangover over the course of the following day. Now, if we feel that headline is, incredibly strong, then that's going to be, a hangover that lasts a day or two. If we feel that headline's pretty weak, maybe it only lasts a couple of hours into the open the following day, right? So you'll often see, all right, this is what I'm looking for in the open. I'm looking for a hop to the upside, a pullback to the VWAP, and then from there, over the remainder of the day, I don't really care what it does for the remainder of this, 23-hour Globex trading period. We'll take a step back and analyze what we want to do on a kind of longer term, position, right? In which case, we've got a whole new set of market fundamentals and procedures to go over, which of course are going to be infinitely more complicated than what we just discussed. But the process is the same, right? Is all we're trying to do is identify what we think is moving the market and how long that particular headline is going to stay in vogue. Whether that's the actual reason is irrelevant, right? We are kind of trying. What I'm essentially trying to do is get inside the heads of the masses, right? What do we think the rest of the world is going to think about this? Not what I think about it, right? I'm not trying to determine, what I think this Fed rate is going to do to the market over the course of time. I'm trying to think, what is this Fed rate decision going to make other traders think, or the majority of traders think, in the immediate future? And then that's how I'm going to day trade my position. Okay. And then over time, right, that's where the long-term reads come in. And that's where you can get a lot more, I suppose you could call it, educated on your, in terms of your micro and macroeconomic picture, right? Because what I just described is fairly simplistic, right? And you're not necessarily trying to determine what's right for the market. You're trying to determine what you believe is simply going to occur vis-a-vis the minds of other traders. Okay? So very simple. And we've done so the last X amount of days, and I kind of feel like a broken record here, but here we are. This is the strike zone. For those of you who aren't familiar with me, it's an alert service where I send out trades every day, 1 to 3 trades a day. I'm usually on the mic for about 2-3 hours a day. Send those alerts out through the alert service or through our internal service above. Here are our profits, or here's our account, averaging $1,000 a day, 40 days running. So we'll see. I think right now we're about a scratch on the day, maybe a little less. Depends on where you were to mark these current trades. But let's see, 11:20. So we've got 3 more hours left before the day's over. So yeah. So I hopefully you folks on YouTube and the Free Trading Room enjoyed this video. Again, just a very brief surface look into kind of reading the tape. But again, the objective is not necessarily to determine what should happen in the long run, but what's going to happen in the short term, and take that feed away in order to determine your short-term intraday bias. So have a lovely afternoon, lots of love. And from everyone here at Simple Trading,